for tonight, we'll be looking at we'll look at the fundamental when it comes to technical analysis. We'll try to look at that. Though we start today, we may not finish it. I don't think we won't be able to finish everything today, but we just start and we'll just look at those some technical aspect of it that very essential. So when we are talking of cryptocurrency technical analysis, there's no how we want to talk about it without not looking at the history, like how it all started. You understand? So like the crypto charts, we will look at that too as well. It's something that is very unique that we need to understand. Learning technical analysis and all the jargons that go along with it can be sometimes very intimidating, especially for the beginners. So it's one of the reasons why we're having this class, and we'll look at the part 1 tonight. So it is essential to know the for example, like the Dow theory, to have a better grasp of technical analysis, you need to understand Dow theory. The fundamental idea behind Dow theory is like the market takes everything into consideration during the pricing. All existing prior and upcoming details have already been integrated into the current asset prices when we are talking about Dow theory. You understand? That's number one. You need to understand. Then now let's now take it to crypto, because most people associate, of course, we associate Dow theory with maybe like a forex and some other other asset that we normally trade aside crypto, but we still take this concept. You understand? All those concepts, like I said, they been derived from the Dow theory. You understand? So when it comes to crypto now, the things that are consider like multiple variables like current, past, and future demands, and any sort of a regulation that may impact the crypto market. You need to understand that. Then another thing that you need to understand, like the price movement as well. Price movement are not exactly random. They follow trends. More often than not, it may either be long or short. In fact, like what we're experiencing with the Bitcoin, for some days now. And again, market analysis are focused on the price of a coin, you understand, rather than every single variable that produce a movement in its prices. Okay, sorry, somebody is asking whether we are live. Yes, we are live. Yes, we are live. Yeah, for you to be part of this, just go to our Facebook group, facebook.com/groups/blockchain republic, and with that you'll be able to see the even the recorded version. You can get it there if you're not online now. So history tends to get repeated, as you know, because of this reason. It is possible to predict the market behavior as traders react the same way when presented with a particular kind of pattern. So when it comes to Dow theory, there are about 6 tenets of it. We'll look at that tonight before we move into the technical analysis. So Dow theory has 6 basic tenets. Okay. Okay, so like number one, the true movement of the market. Now, as you can see, the primary movement is the main movement, which is a major trend and may last for maybe less than a year to several years. You understand? I don't know if you can see my my mouse. Can you see it now? Can you see it from this side now? Like January, this one to June. You know, so you can see the major trend here. If you look at the midterm trend, you can see that in between April to June, you know, we have another one midterm uptrend here, which is around in between March and April, you know. But sometimes it can take several years as well, you understand, and it can be bullish or bearish. You know, I remember, was it 2017 stroke 2018? Yes, late December 2017 to January 2018, then when we witnessed the bullish in terms of in regards to Bitcoin. You know, do you see how long it takes us to, you know, it almost I think it was more than a year, you know, till today we've not gotten to that point. You understand? That's more than 2 years now. We've not gotten to that the 20,000 or 18,000, you know. So that's, we are still some people lost, you know, their investment. People that they don't really understand the market, they don't understand the movement, they don't understand the chart, you know. So then we have the like I said, we have the medium swing, which is a secondary or intermediary reaction, and this may last from in between 10 days to 3 months, you know. It generally tracks from between 33% to 66% of the primary price change since the previous medium swing or start of the main movement, you know. In these three movements of the market, we have the final one, which the short swing or the minor movement, you know. It varies according to market speculation from hours to a month or more. You understand? It's not just you can't just it's not something that you can say that okay, it will take so hours. You understand? So it can take 1 month, it can take, you know, and it can take just few hours, it can take few weeks. You understand? 2 weeks, 3 weeks. So these three movements can happen simultaneously, as in concurrently. They can be, you know, they will just three of them. The three movements can happen like I said, simultaneously. You know, for example, maybe when we have a daily minor movement in a bearish now, secondary reaction in and secondary reaction in a bullish primary movement. So the daily minor movement, that one, it took place, sorry, it can take place in the, which is in the in a bearish, you understand, bearish, and secondary reaction in a bullish, which is a primary movement. That's about the true movement of the market, okay, which is a part of the sixth tenet of the Dow theory. Okay, so let's move to the three phases of market trends, you know, which is the second part of it. You know, the three phases of the market trend. Here there are three phases of major market trends. You need to understand. Now we have the accumulation phase. This is the period when, you know, the veteran investors, you know, people that they have the understanding of the market, start buying or selling the asset against the general perception of the market. Understand? So during this phase of the market, the price of the asset doesn't change much because this investor are more like the minority, the whales. Let me use the market language, the whales. So it may not really, it may not really have much effect on the price of the asset. You understand? So now, then the second one, we have the absorption, the absorption, phase, which eventually the market catches onto this. The smart investors, they follow the trend, and more people likewise, they take that lead, they follow this trend until the speculation, circulates, it's everywhere, that everybody know what is happening. Understand? Like like what happened in the year 2017, December to early 2018. That's one of the absorption phase. So of course the smart investor, they will start the move, understand the trend, then everybody will just jump onto the trend without understanding what is happening. Oh, Bitcoin is going up. Oh, what is happening? Then that will not take us to distribution phase. So after huge speculation, your uncle in a village that doesn't know can't differentiate between mouse and keyboard, that just want to come and make some profit from Bitcoin, jump on board. Sorry for that. I know just a lot of people just jump into that, and then the distribution phase will now take place. So because of the limited supply of the asset, the price begins to retrace as the veteran investor or the eligible investor begin to distribute their holdings to the market. They begin to as a result of it, the price starts falling along with the volume. You know why? They are taking profit. You understand? They are taking profit. So that's about the market trends. So the third one that we'll be looking about the downturn is the stock market discount, which this has to do with the news. The stock market incorporate new information as soon as it becomes available. So once this news is released, once you have the breaking news, the price of the asset changes to reflect this new information. For example, if you just, I think, okay, that should be last 2 months ago now. Yeah, well, last 2 months, the news started, speculating about an Ethereum 2.0. People started buying, just accumulate enough of such. They did foresee. Of course, I'm not saying that the market will still not go up. That what people are expecting, the bullish won't come. I'm not saying that, but what I'm saying that they didn't foresee this particular phase that we are now. That the market retrace back. They didn't foresee that. So like I said, the price will reflect the sum of all the the fears, the expectations of all the the hopes, the anticipation, you understand, of all the market participants, people that are involved. So factors such as interest rate movement, any expectations, revenue projections, major elections, product initiatives, just think of it like for example, what happened now, the pandemic too as well. These are the factors that can contribute to such. They are all integrated into the market price. You can't just separate them. So that's about the the stock market discount all news. Then the other one, which is number 4 that we should looking at, is the stock market average, which must confirm each other. So they must confirm and to understand how this works. Now let's take for example, there's a company maybe in Lagos Island, and there's another company in maybe Yanapaja. So suppose the company in Island is it's more of a handicraft company, and the one in Ipaja is into let's take maybe exporting of produce now. So now the company in Lagos Island uses the service of the one in Aja, in Yanapaja, you understand. Maybe they take their goods there to export, now to take them to maybe Cameroon, Ghana, or US or whatever. So if the one in Island gets more business, which means that the one in Yanapaja too will get more business as well, since both of them, they work vice versa. So if an investor is interested in investing in the one that let's say the company in Island now, maybe they are producing cashew nuts, or they are just mango or whatever, and the one in Yanapaja is the one that is exporting it, you understand. An investor is interested in investing in the one that plant, produce, harvest mango, which is in Island. They need to look at the performance of the one that export it. Now, because if anything happens to that, they automatically will affect the one that producing. For example, what one can, okay, now look at let's just take pandemic that happened now, that made dollars to gain that the in value against naira, that weakening our naira, which is because a lot of factors happen. People that buy exchanges the dollar from CBN, they couldn't buy. CBN is not releasing to the bank is not releasing to them. People can't travel. A lot of things that affected that. Imagine someone that export now, he can't export again. You understand? Because of that, the border has been closed, and somebody has harvested mango that need. So company in Island need the service of company in Yanapaja that normally export for them, but because of what happened, they can't. So these two averages should be moving in the same direction. You understand? And if these two averages are diverging, then it's a sign that market trend may be reversing soon. You understand? Because the mango will start spoiling, they won't be able to export it. You understand? So that's about the stock market average, which must confirm each other. They go hand in hand together, and if something happen to A, it can likely affect B, and if something happen to B, can likely affect A. Understand? So the fifth one, which is second to the last, trend get confirmed by volume. What does it mean? Dow Jones believe that volume is a secondary yet important factor in recognizing price signals. This is how volume react during major trend. Now, number one, like during the uptrend, volume should increase with the increase in prices, right? Now, during the downtrend, volume decrease with a decrease in prices. Do you understand? Let me come again. when the market, is everything's on point, of course everybody want to have small cake of it, you understand? So volume should increase, you understand? People want to accumulate, you understand? With the increase in prices as well, you understand? By the time you hear now that Bitcoin is going to maybe just it's going to 12,000, 15,000, you will see that those people that have exchanged their Bitcoin for maybe on DeFi platform now, they will begin to return it back, convert it back to Bitcoin, you understand? Because they want to have some of those things and the BTC assets, so they can make profit as time goes on too. So because of that, there will be you will see increase in the volume and the price too, you understand? Because of the demand. Same way too, when there's a downtrend, volume decrease. Everyone is trying to looking for somewhere to dump it, and make and try to have their to trade it against another asset that they believe maybe like a stable coin, you understand? And once you see that is happening in the market, the price begins to come down, so that we see decrease in the price. So the last one, which the trend will exist until definitive signals prove that they have ended. So this last tenet is a lot like a Newton's first law of motion, that is, an object in a motion tends to remain in a motion unless acted upon by an external forces, understand? So the same way, Dow believes that the market remains in trend despite market noise, whatever that is happening. So that one they don't just care about the market noise, in as much as the market remains in the trend, you understand? That trend is still upholding, you understand? So determining a reversal in trend is not easy. It's not something that you can just use your emotion, your just human, just your head knowledge, you understand? It's something that you have to look at very well and understand the principle that guides those things. Okay, so quickly let's look at technical analysis. Okay, let me see if in case there's any question. Okay, all right. Okay, so please, in case you have any question, just drop it in the chat so I can look at it. All right. So when we talk about technical analysis, now that we understand the sixth tenet of the Dow theory, so let's try to look at it will be easy for us now to understand the technical analysis, where this may look like a jargon to you if you are hearing this for the first time. So I will just advise you to go through, look at the video again. I will try as much as possible to make it available. Okay, so when it comes to technical analysis, is a tool or a method used to predict the probable future price movement of a currency, or a stock. But now we are looking at a cryptocurrency, so it can be a creative and a dynamic which helps you gain a very deep perspective into the market. Okay, so let's try to look at Okay, all right. So, well, don't be scared about all these things that you are, all these jargons. You know, technical analysis isn't as complicated as this, or as you people just use the language, just the keyword, you understand. So now let's move into the time frames of which is the aspect of the technical analysis, like I said last week, the crypto chart. So we're looking at different time frames for crypto chart. Okay, so we have tonight I will be dealing with 4, which is the popular time frame. Understand? We have the 15-minute chart, we have the hourly chart, we have 4-hour chart, we have 6-hour chart, we have, and so on. We have daily chart, which is a 1 day, but majorly the popular one, 15 minutes, hourly chart, 4 minutes, 4 hours chart, and 1 day chart, which is daily chart. So when the technical analysis examine the price chart along with the technical tools, they also need to be mindful of the time frames that they are considering. You understand? So popular time frames that traders most frequently examine, like I said, these are the 4 that they most often they look at. So the time frame that a trader chooses is directly dependent on their personal trading style. You understand? Some people, they are okay with 15 minutes chart. You know, it's their style. You understand? Maybe they are not looking at the long time. They just want to look at the market within what happened in the market within 15 minutes. You understand? So traders broadly fall into 2 categories. We have intra traders and we have long-term holders. You know, so if we are looking at intra traders, people that just these are the traders who open and close their position within a single day. You know, they make their profit. They are not looking at long term. They just want to make quick money, sharp. You know, why? And this is, you know, I won't blame them. It's one of the reasons why they prefer the 15-minute chart. You know, they prefer the short-term frames. You know, 15 minutes, 1 hour, 5 minutes chart. You understand? This they work within that. That's their style, because I mean, it's a daily profit that they are looking at. And we have the long-term holders. Long-term holders may hold their position for weeks, months, years. I mean years. For example, there are some people that bought Bitcoin as maybe when Bitcoin was like $500-$600, till today they are still holding it. They've not sold. You understand? They are looking at. Some people believe that, okay, once it gets to 500,000, okay, that's when I will start selling. Well, it may take them 20 years. Eventually they may wheel it out so their children well, that's the joke apart, you know. So these holders find more value in using like a 4-hour daily, weekly charts and so on. You understand? So now a 15-minute chart may be a very significant indicator for an intraday trader, but it may not be that important for someone that is holding for the long time. You understand? So you have to choose your style and see the area that you are much more comfortable with. Well, sometimes there are some coins that I'm still holding now for the past 3 years. Yes, and there are some I just trade. For me, it's in between. You understand? It's in between. So I will say that it should stick to a particular one. Okay. So I will want to stop here, but I want us to look at some uh, some candlestick charts, so which is going to be part of part 2 that we'll be looking at tentatively, maybe on Thursday or on Saturday. So okay, let me just give you snippets into what we'll be looking at. So we'll be talking about the Japanese candlestick chart. You know, we'll be looking at it, and we try to how you can study it. You know, what the body, the shadow, what it means. You know, because every candle has body, you know, has a body and a couple of shadow that are sticking out of it. So we'll be looking at it. Then what does the body shows you, you know, and the difference between the opening and the closing price. We'll be looking at that, and a whole lot of it, you know. Then we're talking about a bullish reversal pattern, you know, a couple of things that we'll be looking at probably on Thursday, you understand. So this video will be available. Go through it. It's a little bit sound technical. I may do a short video again just to explain some area that maybe after, if I see some questions, I can do some short video just to explain those questions. Just drop your question in the as a comment, you know. Now all these things won't make any sense if you are not getting your hands daily, if you are not trying something out. Now don't get this thing twisted or like very complex or complicated. See, first thing you need to understand how you can buy. Maybe store as the value, you know, or you buy now. Maybe when this market is very down, you just buy, you keep, then once it goes up, you sell, you understand. So just have that mindset, you understand. So the chart reading, you begin to understand it as time goes on, but don't try to don't be scared. Don't look at this thing that, oh, I don't think I can understand this. No, you understand. So I will advise you, in the comments I'll be dropping the link. Try to sign up. Number one thing what you need to do now is that conquer that fear. Sign up, you understand. Register to a I leverage on a Binance platform. Of course, I've used other platform in the past, but for me, I'm okay with Binance because I can easily withdraw my money to my bank account straight, and I can deposit from my bank account direct, you know, use my bank account to direct deposit to the Binance. So vice versa, I make profit, I withdraw it back to my account. I want to fund my account on Binance, I use my bank to fund it. So it was, I mean, it's kind of easy for me to do that. So it's one of the reasons why I leverage on the platform. So I'll drop a link in the chat. I'll try to register. There's a video we did last week. If you go onto our YouTube channel, you can find that video on how you can try trading. I mean, for the first time, how you can complete a trade. Just buy something, keep it, at least to see how, to have the feeling, the experience, you understand. Just as low as 500 naira, just try something out, and you can see the, you know, how this thing works. If you don't try it, it won't work, you understand. So thank you for joining me tonight. We stop. Okay, how do you start trading in crypto? Say Tron. Okay, Mr. Solomon, there's a video on, I will drop our YouTube link now, so you can look at that. I did a short video on how you can trade, you understand, how you can trade. First thing what you need to do is to register, have an account on the on a crypto exchange, get your account verified, deposit into it. Then, for example, Tron, if you want to trade, you want to use BTC to buy an asset, and the asset is like Tron. So you look for the pair, you look for TRX against BTC, in the under the market. From there, you use your BTC to buy the asset. You understand? Once you buy it, or you can place a buy order, and it will be filled. If you don't want to buy from the market price, you can do the limit. You can use the limit order to place your buy order, and once it's been filled up, you will just then you go back and it's either you keep it, maybe you still don't want to sell now, or you can quickly schedule your take profit. So you go to on the sell side of the platform, and you just key the entry, okay, that on the first, you can divide into like 3 or 4. So if it's for like 25% of it, once the market hits, so maybe you buy it at 1 naira. Once you get to 2 naira, set 25%. So don't sell everything at once. You say, okay, once you get to like 2 naira again, set 25%. Once you get to 3 naira again, set 25%. So in case in between 1 and 4, no matter how, you will still make some profit. You understand? No matter how, you will still take some profit. So sometimes you can just each 1 and 2, and after that, the target, the market may retrace back. So put your target on the first, divide your target into 4 segments. Sometimes you can do 3 segments too as well, but make sure that you don't sell everything at once. You understand? Because if you put everything on target 1, maybe the entry is like I said, is 1 naira, and your first target, you want to make it like 5 naira, and you put everything at 5 naira, and funny enough, it goes the target 2 now. There's a hit 7 naira, target 3 hits 10 naira, target 4 hits 15 naira. If you sold everything at 5 naira, then you see that you won't be part of it. You won't be able to take profit at that 2nd, 3rd, and 4th, and so on. You understand? So for me, I divide my target into about 4, sometimes 5, and I just take profit. So if you stop at 1, fine, I've made profit. Then I will wait again there. Then stop. Well, there's another one that we'll be discussing as time goes on, but I don't want to take much of our time tonight. So we have to stop for now. Maybe on Thursday, then we'll look at what I call it again now. Okay, the candle, the candlestick chart. Yes, we'll be looking at the candlestick chart. So some other area too as well. So thank you everyone for joining me tonight. So I'm dropping the link to sign up. So don't just wait. They don't need to waste any time now. Just try as much as possible to register. No matter what, sign up. You understand? Sign up, and then you can continue that from tomorrow. You understand? But try as much as possible to sign up, and once you sign up, you verify your account, you deposit. And with Binance now, you don't need all those long like in your driving license, international passport, all those things. Just with your BVN number, you can verify your account. Just once you register, you create your account, you input your BVN number, and that's it. So be able to verify. So I just dropped the link now in the chat room. So that's the link to register. Then our YouTube channel. Let me try to look for our YouTube channel. You know, so we have about okay, probably about 3 videos there. Okay, so we have it. So just try to okay. So that's the video for the YouTube channel. Check there, like Mr. Solomon asked, you'll be able to see that on the channel, on the YouTube channel. All right. So thank you so much. I really appreciate everyone. So we continue from probably Thursday. I will release the information on our group. Try to join our Facebook group. We have a group on Telegram too as well. T.M/Blockchain Republic. Then on the channel we have T.M/Blockchain Republic _ channel. On the Facebook we have Facebook.com/blockchain republic. We have Facebook.com/groups/blockchain republic. Understand? All right, enjoy your night.